Tech is falling. Here's why. Hi, I'm Kevin Castaneda, and this is Kev's Mindset, where we talk everything finance, investing, mindset, and productivity. And today we're going to be talking about the tech fall and why tech, SPACs, high PE stocks are coming down, and they're coming down very rapidly. And also, brokerages like Coinbase are coming down as well. It's kind of scattered, even Bitcoin's coming down, but Ethereum's flying. It's kind of strange, and we're going to be talking about why high PE and all these stocks are coming down. Yeah, it seems like the S&P doesn't stop hitting new highs and new highs and new highs. So there's a big shift. There was the first shift, which was shifting towards recovery stocks. Now the recovery trade has kind of ended, as we've seen United fall off its highs of around in the mid 60s, and it's coming back down. It's about a break under 50. Now, this is very important to note, because it was obvious that these stocks are overvalued. Recovery's not back. Yes, about 40% of the United States is vaccinated, and that's great to know. Regardless of your political position, it's good to know that COVID is coming down in the United States. And so this should be a catalyst for recovery. However, the issue is that recovery is now was somewhat overvalued before, because it just kept going up, because people were like, okay, it's gonna go up because COVID cases are going down, there's more vaccines, the US is getting better and recovering, and that's true. But now they got to a point where they were like, hey, this makes no sense. They're overvalued. The companies are still losing a bunch of money because they're still in the recovery phase. And so hedge funds and everyone who moved to recovery or traded the recovery trade pretty much is getting out of it, and they're moving more towards industrials and things that are having shortages, because they're getting high margin for it. There's a big chip shortage. Lumber prices are up 250% year over year. Everything is just, there was something on the news about corn, about how corn's up 52. And obviously that has nothing to do with high P stocks or anything, but it does show you that everything is going up, and there obviously is inflation. Now, what we need to see is how high will this inflation be, and will it be persistent? And personally, my own thesis is that inflation will be here, obviously, because there's been a lot of stimulus, there's been a lot of money printed. However, I don't think that this will persist. I don't think it's going to continue for a while. I think we're going to see inflation momentarily, and then by June, July, we're going to be okay, and we're going to start coming back as all this fear goes away. Right now is the time to go and look at those. If you like stocks some stocks that are high P, some stocks that are tech stocks, even Coinbase. If you want to see all these companies, if you like these companies, I would suggest that now is the time to buy them. Now is not the time to go and try and get in the recovery trade. Now is not the time to go and get all these industrials. It's not the time for that. You're not going to go and get Coca-Cola or something and try and get your dividends. Now is not the time for that. Now is the time to buy the dip on companies like Tesla, on companies like CCIV, on companies like Enphase. Even cannabis is down, like Tilray, Afria, which just merged with Tilray. It just got delisted, but everything because they're merging. But anyways, a lot of stocks are down. So you have to go through the market and kind of analyze, what stocks do I like? How much do I like them? Why do I like them? And make sure that you have good enough conviction to know that, hey, if I buy this dip and it keeps dipping, oh well, I'm just going to keep buying, and it'll be okay. But don't get stuck with something that you don't really care about. And I know that's not exactly what this video is about, but don't buy a company you don't care at all about, because the second it goes down, you're going to feel awful about yourself. You're going to be like, oh, I should just sell it, I should just take the loss. But if you care about this company, and if you believe in this company, whether you're down or up, it doesn't matter. You're going to hold it, you're going to be okay. So make sure that you're buying companies that you care about and that you believe in. That's the first thing. But make sure that you're getting in and buying these dips, and consistently buying the dips, because you're not going to time the market perfectly. You're not going to wait, buy, and then it's going to fly up. That's not going to happen. I mean, maybe it will, but your chances of doing that are very low. You're better off averaging in on the down days. So that's all I have to say. Inflation's kind of strange. We don't know what's exactly going to happen. People are scared about rates. People are scared about real estate. People are scared about the new tax. Everyone's really, really fearful right now. And at peak fear is where you need to buy. When everyone's fearful, you need to be greedy. And when everyone's greedy, you need to be fearful, just like Warren Buffett said. So right now is a perfect time to get in on tech and get in on high PE stocks if you like them, and if you want to be in them. So go ahead and do that and get in while it's cheap, and don't get in later when they came up and you're like, oh, it's going up now. No, don't do that. That's how you get stuck, okay? So I do hope you enjoyed this video. Thank you so much for watching. Leave a like if you did enjoy and subscribe if you are new. If you want to start investing with Public and get up to $50 just for signing up, you can go to the link down below, click on the link, and get up to $50 of a stock of your choice just for signing up. Thank you so much, and I will see you in the next one. And have a great day. This was Kev's Mindset, and keep buying those dips.